Hi guys, so this is March 26, 2020, and futures are pointing down as a jobless claims number came in. It was 3.28 million versus 1.5 million expected. So a lot more Americans are filing for unemployment than it was expected, but to tell the truth, I thought it was going to be the case. So in a separate news, House Republicans received and approved a stimulus package bill from stimulus package from Senate, and they're still working on details to approve that stimulus package, $2 trillion stimulus package. So let's jump to S&P 500. S&P 500 trading at pre-market $244, SPY symbol ETF. So I'm looking at this level that was set several days ago, $218, and in 80% of the cases, this level is, not this level, but in general, in deep sell-offs, the low level that was set previously is retested again. So that could happen, obviously, here, and stocks may decline again. So I will be very careful in buying anything on the stock market right now. So let's jump into corporate news. Micron Technology reported really good earnings, beat by 8 cents, and said that the demand remains strong for their chips, and gave pretty good financial guidance. And actually that verified my claims previously that these stocks like Micron and WDC and Intel, AMD, all these stocks, all these chip stocks, they benefit from this environment, from this switch work from home environment. And they will actually make money in this environment. Also, I have to mention Akamai Technology is one of my favorite stocks, and symbol AKAM. NVIDIA, of course. NVIDIA is a very good stock, chip stock, and one of my favorite stock on the stock market right now is Microsoft, because they have cloud, they have Skype, they have Microsoft Teams. They have a lot of components that actually can work right now. So these stocks I would buy on any pullbacks. Okay, so Amazon, on the other hand, it's also a cloud company, and it's trading higher a little bit. But I hear a lot of reports that there are coronavirus cases in Amazon warehouses. So I don't know if I want to be in Amazon this high at $1,900 pretty much. So I would stay away from Amazon at these prices, because I want it to come down before I get into Amazon. Okay, so Beyond Meat was downgraded today by Goldman. Was the new price target of $39, which is incredibly low to me, and I really don't agree with this assessment by Goldman, because people will still buy Beyond Meat products, especially right now. But of course, I understand where he's coming from, because Beyond Meat is selling with like places like Burger King, places like Starbucks and stuff like that. But they also sell in supermarkets. So I don't know if Beyond Meat is warranted a price target of $39. I actually disagree with that. Another company that Goldman downgraded to sell is Expedia Group. So Expedia is actually not a good time to be in Expedia right now, for the obvious reasons. And as I told you before, I'm really skeptical of this rally in leisure and travel stocks, such as cruises and leisure stocks such as Dave & Buster's. I mean, they came up a lot, and I don't know if they can withstand this sell-off or this environment. So I don't know if I want to be in those stocks right now. So in a separate news, speaking of withstanding the environment, MFA Financial. Okay, MFA Financial is painful for me to say because like a couple of months ago I recommended the stock because I thought it's a solid company with a solid balance sheet, and actually it's a 25-year-old company that withstood 2008 crisis, the mortgage-backed securities crisis, and all of a sudden they didn't have enough hedges to withstand this mortgage-backed securities sell-off that happened recently. So they were caught wrong-footed and basically issued margin calls against them because they had too many. They didn't have enough leverage and didn't have enough hedges to cover their margin calls. But it's a big institution. They have negotiated something, as far as what I've heard, with the clearing houses that issue those margin calls, and mortgage-backed securities came up from that point a little bit. So this stock is recovering. So it's nearing like $2 right now per share. And I don't want to buy this stock, but if I'm holding this stock, I would be looking at selling calls against this stock, cover calls. MFA Financial. Okay, so and another company that I actually like compared to MFA Financial is EPR Properties. This stock has been dropped a lot. At the low it was like $12.56 because people are very apprehensive about REITs right now because they think that tenants cannot pay rent, and understandably so. But this company came out a couple of days ago and said that they are issuing stock buyback of $150 million because of the distress in their stock. So that's good news, and that tells me that they have a really good financial position to do that. And they actually cited that they have $1.25 billion on their balance sheet, which is very high for the company this size and for the REIT in general. So I think that could be a pretty good pickup on a sell-off. EPR. Okay, so CSIQ, which is Canadian Solar, reported reported very good earnings, but provided not so hot guidance, but the stock is still higher. Don't forget that all the solar companies are not paying tariffs. They fought off tariffs like a year ago, so they're in pretty good shape, but I wouldn't jump on it from the beginning. So let it come down a little bit if you want to be in solar. And another company is JKS, which is JinkoSolar, that I like in this space. Okay, so Apple had some news, and they said that they have mulled about delaying 5G phones in September. So they may not be coming up with the new phone in September, and but Apple is still Apple, and they will come back. The question is, do we want to buy it right now? I say maybe it's time to hold off on this because I'm expecting a little bit of a sell-off and maybe retesting of the lows, so you may be able to buy Apple a little bit lower. Same thing with banking stocks like Bank of America and JP Morgan and Citi, Morgan Stanley, Goldman Sachs. All these stocks are pretty good actually place to be on a sell-off, okay, especially on a sell-off, because compared to 2008, Fed acted very quickly, and I applaud Fed for acting really quickly in this crisis, and they provide a ton of liquidity right now, so banks are not in any danger to go underwater. So these stocks could be bought, especially with Bank of America and JP Morgan. So Bank of America is a good time to buy, is near $20, I would say, and JP Morgan is $80-85 is my target for JP Morgan. But a lot of companies pulled their guidance recently. A lot of companies said that they're not be able to pay or to buy back stock, to pay dividends and stuff like that. I'm not going to even mention them, but The stocks that I like is that handled coronavirus is Inovio Pharmaceuticals, Moderna, and Vir. Actually, Vir came down a lot, near $30. I think it's a good time for Vir to be bought. And another stock that I like to mention is BMY. BMY reported that they got FDA approval for one of its multiple sclerosis drug. That's a good stock to buy. Okay, guys, that's it. That's the wrap for the day. Don't forget to subscribe to my channel, click the like button, and I'll see you tomorrow.